So I just found an article that was pretty exciting for me to see. Life insurance can be utilized in a lot of different ways. Whole life insurance has been utilized in a plethora of ways over the past 150 years. And one of the most common ways is through a thing called deferred compensation or an executive bonus. And this is utilized at the corporate level in a lot of different ways, but it's a really common way to enable yourself as an executive to kind of get a personalized pension. There's a lot of tax benefits, there's a lot of things going on, and the challenge is a lot of people are pretty secretive about how they do it. And so when I find somebody that's of significant status that's willing to come out and be open about it, or that their contract happens to be public, it's pretty exciting. And so I found this article, and it's not new, it's actually about 7 years old. However, it was Jim Harbaugh, the coach of the Michigan Wolverines. Now, if you're a college football fan, everybody, if you're an NFL fan, you know who Jim Harbaugh is. He is actually taking a portion of his salary, or took a portion of his salary over the past, because now actually it's kind of come to fruition, and it's beautiful because he's still at the school, he's still coaching. So my guess is this is still working itself out, and it's still playing out amazingly for him. But I'm going to share an article in this video that Jim Harbaugh, that was written by ESPN, and I'll put the link to the article in the description. Jim Harbaugh is getting paid in life insurance, and I'm going to go through why and talk about the strategy behind why would one of the top paid college coaches in the nation want to get paid in whole life insurance. Let's get into it. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and we're talking about Jim Harbaugh in this video and the fact that he's getting paid in whole life insurance. Here's the deal. I shouldn't say it's whole life insurance that he's getting paid in, but typically speaking, deferred compensation, executive bonus things are handled in whole life insurance, not index universal life insurance, because of the fact that these companies know the guarantees, and they really need, from a pension perspective, the guaranteed side of the ledger on the insurance balance sheet has to be there. That they need those guarantees on the illustration to be able to back up the promises held there, whereas index universal life simply just doesn't do that. And so yes, full transparency, I'm going to tell you, I don't know for fact that this was whole life insurance. There's nothing, it's not public. Nobody really knows. I'm speculating. But what I know about the executive bonus world and deferred compensation world, it's typically done in whole life insurance. So what I wanted to do here is I'm gonna go to my computer, and I got my monitor up here, and I wanna share this article. And now this article is a pretty cool article because Jim Harbaugh, you can see, this is an article on August 17th, 2016. Now this is obviously an oldie but a goodie. It's new to me. That's the reality here. I had my business partner, Jeff, told me about this, and he's like, man, Chris, did you hear about this? You got to see this. You got to do a video on it. And I read it, and at first I was like, it can't be that much there, but it was pretty cool. So I want to just go through this article really quickly, and I'll put a link to the description to this article in the description below. But Michigan football coach Jim Harbaugh agreed to a contract amendment that will increase total payments from the school to $9 million in 2016. So in addition to paying a $5 million salary for each of the remaining 6 years on his deal, so that just ended obviously in 2022 based on the timing of all this, so this is an old article, Michigan will also loan Harbaugh $4 million in 2016 and an additional $2 million for the following 5 years to pay the premium on a life insurance policy. So here's the cool part. They basically gave him $4 million the first year and $2 million each of the next, so $14 million total to cover an insurance premium. Now, my guess is for an insurance premium of that nature, he probably picked up about $35 to $40 million of life insurance. Now, it's pretty cool to think about the fact that it's this kind of leverage. Now, why would he want to do this? Let's go through and see what ESPN has to say. I want to read this article, and then I'll get into my kind of analysis and speculation on this contract and why would anybody do this. So the first $2 million loan was made on June 3rd, according to the records obtained by the Freedom of Information Act request. Each additional $2 million will be made on the December starting later this year. So $2 million made in June. They're going to make. Probably had to wait 6 months to make the next payment. They probably backdated the first payment or something, and had to make the $2 million payment in December, starting each year thereafter, right? So they're going to do a total of 7 years effectively, because there's a 7-pay test on a whole life policy, and that $14 million times 2, or divided by 2 is 7 years. So that just goes to show that's what they're doing there. It's pretty easy to break down. As long as the insurance policy stays active, Harbaugh does not need to repay the loan until he dies. That's a key component. He doesn't have to repay this loan until he dies. They paid him in a loan, so he doesn't have to pay taxes on that as income, right? So that's pretty powerful stuff. At that time, the university can recoup its original investment, and the rest of the insurance payout would go to whomever. So the cool part is there's no really risk on the school's part, because they're going to pay him in the form of a loan. So they're not really paying him, they're giving him a loan to buy this life insurance contract that's going to put in place a deferred compensation. He's not going to touch it right away. He's going to have access to that capital. He controls the capital up to a certain extent. The school will get paid back their money, and that part is no problem. But what's going to happen is, my guess is he's going to set this up as a deferred, as his own kind of deferred pension, right? So when he retires, he's going to be able to leverage this and access the money tax-free through policy loans. And this is what these high-level executives do, and a lot of these Fortune 500. When I always kind of say corporations own more life insurance than the rest of the world put together, it's because they're doing these types of policies where corporations are doing deferred compensation and executive bonuses on key executives and strategic employees. And what happens is they are able to get their money back. They give the money to the employee, i.e. Jim Harbaugh, in the form of a loan. He gets the benefit. He gets to choose the beneficiary. He gets to control the money. He gets access to it in the form of a pension, tax-free, through tax-free loans, because he's using the policy loan provision. He's never having to claim income. It's all through a policy loan that's backed up by the death benefit. And because you're not going to loan too much, it's not going to lapse the policy. You manage it properly. What's going to happen is, when he dies, all the loans he took out for income are going to be paid back by the death benefit. The school's going to get paid back what they loaned him, so they're going to be made whole, probably a little more so than whole. And then there will be money left over. Not sure how much, but there will be money left over above and beyond all that to pay to his heirs. And that will be done in a tax-free basis. So this is a way that wealthy people understand how to do it, and it's just amazing to think. And so there are protections here that, should the policy be stopped at any point, Michigan would still be entitled to get its money. So they're protected. If Harbaugh got fired or whatever, he'd have to start making the payment or whatever. But the deal ensures that Harbaugh's heirs should get, should he die while he's at Michigan paying for the policy, would get no less than 150% of the premium. So it's leverage on that side. Whatever the premium is, that $14 million, they're going to get 150% of that premium that has been paid. Let's assume, so if it was, if they'd paid 5 years, $10 million, they're going to get $15 million, and the school would get the rest, right? That's how that would work. The 150% clause protects the university as well. Harbaugh is allowed to borrow against that policy while he's living, but he has to keep at least 150% of the premium value untouched. So the school is protected. Their capital is protected. That's how they're going to get their money back on a guaranteed basis. And there are ways you design these policies that, you can assign certain portions of the value contractually to different entities, whether it's a corporation, a school like this, whether it's you're doing collateral assignments when you're doing third-party lines of credit, stuff of that nature. There's all sorts of flexibility when it comes to it. This gives the school the cushion to make sure it gets its investment back. So what's cool is, this is the way the school is able to compensate Harbaugh. He's able to benefit from all this, and the school's not really losing anything, which is pretty amazing. So Harbaugh's original 7-year contract with the school allowed for the parties to sit down and discuss additional compensation after the coach finished his first season with the Wolverines, which they obviously did, and it led to this. Those discussions, this part's fascinating. I love this, and this is a key part. And it's so hard to find unbiased information like this on the internet that talk about these facts. When you got all these people like Dave Ramsey saying, oh, whole life insurance is horrible, why would anybody do that? If it was so horrible, people wouldn't be doing this, right? Corporations and schools and high net worth people wouldn't be doing this. And if it makes sense for them, it makes sense for everybody, because the principles of money don't change. Your behavior with money changes, and it's a little easier as you become higher net worth Absolutely, but the principles don't change, and that's the key. So those discussions started under interim athletic director Jim Hackett in December. Hackett, the former CEO of Steelcase Furniture, laid the groundwork for this deal, which a source at Michigan explained is a more commonplace form of deferred compensation in the corporate world, i.e., it's not often that college coaches do this. It's not often that colleges will offer this sort of deferred compensation, but in the corporate world, this is a much more commonplace situation, i.e., this happens almost every day with or at least every year, every corporation is doing some sort of deal like this. And this is why I always say whole life insurance companies are the backbone of the financial institution, because banks do this, the biggest corporations in the world do this, and this right here is awesome. I was grinning ear to ear when I saw this, because I was like, man, it's so hard to find content that just in an unbiased fashion, that's not from like some journal of a life insurance person like myself trying to sell people on this, talking about the fact that this is truly what happens. You got so many people on the other side, like Dave Ramsey and Susie Orman, that don't know what they're talking about, spouting off at the mouth about how bad whole life insurance was. Once again, if it were that bad, these companies wouldn't be putting millions and millions of dollars into this stuff, right? Billions of dollars when you go across all these entities that are doing it. So, new athletic director, Ward Manuel said in March that the amendment to Harbaugh's contract was nearing completion. They came to the agreement. If Harbaugh decides to leave the school or is fired, the university will stop providing loans for the insurance premium payments. So that means Harbaugh would be on the hook to complete the payments. If the insurance policy was canceled, if Harbaugh didn't want to complete those payments, which, by the way, let's face it, he's got the capital. He could continue the payments if needed. Thank goodness we're looking at it hindsight now. The terms of this are up. He's still employed there, so this obviously got completed, which is great for the school. It's great for Harbaugh. It's great for his family. It's great for his retirement. It's great for his financial security. I wish I could get Harbaugh on this channel. If anybody has a connection at Michigan, I would love to interview him about this if he'd be open to it. It would just be such an honor to, like, first of all, I was a huge Niner fan when he got them to the Super Bowl, and anyway, I think the guy's a rock star. Harbaugh will need to pay back the money that they loaned to him if it gets canceled, and if he does cancel the policy. He's not going to have to pay back the money he loaned if they fire him. If they had fired him, he wouldn't have to pay it back. Only if they fired him and then he canceled it and he didn't continue making the payments on his own. So he obviously probably thought that one through. It's like, hey, if I get fired, I see the value in this. I'm probably going to continue to make those premium payments anyway. It's a good thing. Harbaugh's contract and the amendment are both set to expire in December 2021. So boom, there is a clause in the deal that allows the two sides to renegotiate after his fifth season in order to make sure Harbaugh's salary still meets market value. So I don't know if they amended his salary, if they kept paying it in life insurance, if they upped it, or what they did. But at the end of the day, it's a pretty cool thing. I think it's phenomenal because when you think about it, it's just leverage. The school was able to pay him through a loan, which means so they don't have to pay employee tax on that money. He doesn't have to pay income tax on that money. They're able to recoup the money so that it benefits him and it benefits them. Long term, there's less risk in them, so it's just leverage. They're able to pay him more with less risk because they're going to get that money back. It's kind of like an endowment, right? They're going to get that money back. He's able to get a tax-free pension out of the deal, right? And that's pretty amazing. He's able to protect his family more in the short term if anything had happened to him, which now we know it didn't. But if anything had happened, there's leverage. His family was going to get a 1.5x multiple of his income, of the amount of money paid into the premium, to protect them above and beyond whatever other benefits he had. And now when he takes his pension, he's going to get tax-free income. School's going to get their money back. Plus, at the end of the day, when he does pass away, there's going to be money left over. So his family will be able to inherit more money tax-free for the next generation. And so from every angle, this makes sense. And once again, if you look at this and it makes sense for him, it makes sense all the way around the board. Now, I understand it's harder for some people, when we're at lower to middle income brackets, when people are in that space, but the principles of this don't change. And it's not hard to execute. Yes, you got to do things. You have other challenges. You got to get out of debt. You got to do things a little bit differently. And maybe you have a couple other things in your financial house to get in order before doing something like this. But I wanted to put this up here for a video to kind of just show, use common sense, folks. People like Dave Ramsey, Susie Orman that say whole life is bad. If it were so bad, the most successful people in the world, the schools, the corporations, the banks, they wouldn't be doing this, right? This sort of product, whole life insurance, if it didn't have all the cash value benefits that we're talking about, they wouldn't, the smartest people in the world, the best CFOs and like these people, they wouldn't, and executives, they wouldn't utilize this financial product if it didn't make sense. And so I encourage people to use common sense, think about it through these terms, and come to your own conclusion. And you know, do your own research. Don't even just follow my opinion. Just go check it out, and you'll see research, deferred compensation utilizing whole life insurance, or executive bonus using whole life insurance, and you'll see there's all sorts of information out there that is just gonna show you the power of this asset and the leverage of this asset. So that's why I believe it should be a foundational asset in every single person's life. No, you're not gonna be able to start with $2 million a year, but if you start with $500 a month, it's the best place to start saving your money. Safe money is key, especially in the economic environment that we're in right now. So anyway, hopefully you found value in this video. If you did, please like it, share it, get it out there to people. Subscribe, hit the bell, that way you're notified every time I launch a new video. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.